Ladies and gentlemen, what's going on? Welcome back to the channel. My name is John. I got options, and today we are going to break down the four hyperscalers and their latest earnings and Q1 results. So we got Amazon, Microsoft, Meta, and Google. These four companies are basically driving the entire AI market right now. But the question investors are asking is very simple. Are these companies actually making enough money to justify the massive amount they're spending on AI? So we're going company by company, and we're going to look at the exact numbers: revenue growth, earnings growth, CapEx guidance, operating margin, and what the earnings outlook looks like for the rest of 2026. So let's start with Amazon. Amazon reported first quarter revenue of $181 billion. That's up 17% year over year. Excluding the foreign exchange, the revenue grew 15%. So 15% growth in revenue for Amazon. Their net income, on the other hand, was $30 billion, and that's up 77% from $17 billion last year. So their diluted EPS was 2.7 billion, up 75% from 1.59 last year. So they literally grew their net income 77% while only growing their revenue 17%. So what that tells you is massive margin expansion for Amazon. Now, the operating income was 23.852 billion. That's up 30%, and Amazon's operating margin was 13%. The biggest driver was AWS. Amazon's AWS revenue was 37.5 billion. That's up 28% year over year, and AWS operating income was 14 billion. AWS operating margin was 37.7%. So that's the other thing that's happening with Amazon is they're seeing a higher growth in their AWS compared to the overall business, and that's creating the higher net income that you're seeing relative to their revenue growth rate. So now here's the catch. CapEx is exploding. Amazon said free cash flow fell to 1.2 billion for the trailing 12 months because purchases of property and equipment increased by 59 billion, mainly from AI investments. Now, for the guidance, Amazon expects second quarter revenue of 194 to 199 billion, or growth of 16 to 19%, and operating income of 20 billion to 24 billion. So Amazon's story is very simple. Revenue is growing, earnings are exploding, AWS is accelerating, but AI CapEx is eating into their free cash flow. Now let's move on to Microsoft. Microsoft reported fiscal third quarter revenue of 82 billion, up 18% year over year. Their operating income was 38 billion, that's up 20%. Their net income was 31.77 billion, that's up 23% on a GAAP basis. Diluted EPS was 4.27, up 23% from 3.46 last year. Microsoft's operating margin was 46%, which is insane for a company spending this aggressively on AI. Their CapEx was 31.9 billion for the quarter. For guidance, Microsoft expects productivity and business processes revenue of 37 billion, intelligent cloud revenue of 37.95 to 38.25 billion, and Azure growth of 39 to 40% in constant currency. So Microsoft is the cleanest AI story here. Their revenue growth, earnings growth, huge margins, and AI demand that is still greater than available capacity. Now let's talk about Meta. Meta reported first quarter revenue of 56.31 billion. That's up 33% year over year. That is crazy to think about. Meta's revenue grew 33% from last year's Q1. Net income was 26 billion, up 61% from 16 billion last year. So that's even more crazy. So they grew their revenue 33 billion or 33%, but then they grew Their net income, 61%. That's massive. That means crazy margin expansion inside of Meta's business. And to see Meta trading at this low of a valuation of a multiple is wild. I think this is a great opportunity for Meta. But let's keep going. So the diluted EPS was 10.44, up 62% from 6.43 last year. Operating income was 22 billion, up 30%, and operating margin was 41%. So you have a business with an operating margin of 41%, and you have revenue growth of 33%. When you're looking at the rule of 40, which is you're combining the operating margin and you're combining the revenue growth, you want to be north of 40. That's considered a really great business. We're at 70 on Meta. And to think of how big this company already is. And now let's go into the CapEx for Meta. CapEx in the quarter was 19.84 billion, including principal payments on finance leases. The big number investors reacted to was full year 2026 CapEx guidance. Meta raised its CapEx for 2026 to 125 to 145 billion. That's up from the prior range of 115 to 135. Now, the main reason for that increase was due to the money that they're having to pay for memory. So the cost of memory is absolutely exploding. That's why you're seeing companies like Micron and SanDisk just parabolic, because there's a massive bottleneck, which we've talked about before in our other videos, when it comes to the memory shortage. And so these hyperscalers, they're paying the bill, and they're raising how much they're expecting to pay in their guidance. So for Meta's guidance, they expect second quarter revenue of 58 to 61 billion. So Meta had a monster quarter. The business is growing fast, earnings are growing faster, and margins are staying strong. But investors are worried because Meta is spending like a cloud company, even though it doesn't have a cloud business like Microsoft, Amazon, or Google. So they're using all of this compute for their business, for their ad business mainly. Now let's get into Alphabet or Google. Alphabet reported first quarter revenue of 109.89 billion, up 22% year over year. Their Google services revenue was 89 billion, that's up 16%. Their Google Cloud revenue was 20 billion, that's up 63%. Now, this is a much smaller cloud business compared to AWS, so that's why you're seeing much crazier percentage growth. Now, their net income was 62 billion, that's up 81% from 34 billion last year. So they grew revenue 22%, but they grew their net income 81%. These businesses their margins are expanding. These companies are amazing companies. If you simply just look at the QQQ, that ETF, and you look at the top holdings, all these companies are in there. So you can relatively, with less risk than buying each one of these companies individually, you could just buy the QQQ, and you're going to see massive appreciation in QQQ over the next coming years. I still think this market is a massive buy, even at all-time highs. And now let's jump into the EPS for Google. EPS was 5.1. That is up 82% from 2.8 last year. Their operating income was 39.69 billion. That's up 30%, and operating margin was 36%. Their CapEx was 35 billion in the quarter. That's based on purchases of property and equipment. The key here is Google Cloud. The cloud operating income was 6.59 billion, up from 2.17 billion last year. That means Google Cloud is no longer just a growth story, it's becoming a major profit engine for Google. So Google's quarter was extremely strong, search was growing, cloud is exploding, earnings are jumping, and operating margins are expanding. We're getting just green flags all over for Google, and that's why you're seeing the stock jump after. So now here's the bigger picture on these companies. Amazon did 181 billion in revenue. Microsoft did 82 billion in revenue. Meta 56, Google 110. All four of these companies are still growing their revenue. all four are still growing their earnings. All four are still highly profitable. But the market is focused on one thing right now, and that is their CapEx. These companies are CapEx maxing. They are no longer a free cash flow juggernauts that they used to be, and they have pivoted to spending all of their money on AI. All that AI money, they're going to spend $700 billion in CapEx this year. And all that money is going to NVIDIA, it's going to Micron, it's going to SanDisk. I'm sure we're going to hear more about the CPUs that they're going to have to be buying. I think in the next coming years, we're going to hear a lot more about quantum. There's a few great quantum stocks out there that I've been looking at and doing some research on. But let's keep going on these four hyperscalers. So Amazon is spending heavily on AWS and their AI infrastructure. Microsoft is spending $32 billion in CapEx this quarter. Meta spent $20 billion, close to $20 billion, and guided for $125 to $145 billion this year. Google spent $35.6 billion in CapEx in just this quarter. So the whole AI debate comes down to this. If AI demand keeps growing, these companies are building the toll roads for the next decade. But if AI returns disappoint, investors are going to start questioning the spending. Now, my takeaway is this. Microsoft looks the cleanest. Google showed the strongest cloud acceleration. Amazon showed AWS re-acceleration with major earnings growth. Meta had great earnings, but the CapEx guidance is what's scaring the market. So, yes, these companies are spending massive amounts of money, but the earnings are still there. And as long as revenue and earnings keep growing like this, it's hard to say the AI trade is dead. That's all I got for you guys. I hope you enjoyed this little rundown of the four hyperscalers and what they did for the quarter. And it's going to be really interesting and fascinating to see the rest of this year play out. I think the next thing to be looking at, if you want to be ahead of the market, is where is this money that these hyperscalers are spending so much CapEx on? Which companies are getting that money? You have to think about energy. You have to think about memory. You have to think about GPUs, CPUs. These are the areas of the market that I think there's opportunity in. And of course, if you want to keep it simple, the opportunity is right here in your face. It's these four hyperscalers, because once they slow down this CapEx spending, you're going to see massive amounts of free cash flow getting dumped out of these companies, and that's going to come back in buybacks into these companies. So you're going to see the share count shrinking, and you're going to see earnings just absolutely exploding. So I hope you like this video. Make sure you subscribe. Make sure you comment below your thoughts on the earnings for these companies. Let me know what you think. And check out feedmetrades.com if you want to track your option trades and your option income. You're selling calls, you're selling puts. If you do that, then feedmetrades.com is going to help you out a lot on being able to track how much money you're making and losing from your option selling strategies. So stay healthy, stay wealthy, and stay tuned for the next one. Peace.